Hello, I'm Daniel Lader, founder of Lader CPA and Associates, and welcome back to our Instagram Live series. We are talking about building a successful private practice from beginning to infinity. And thank you for joining me all again. Now again, we have to start with that all-important question. Why did the therapist and the accountant go to lunch together? Because one wanted to discuss emotional baggage and the other wanted to deduct it. All right, now jumping right into our topic this week, we are talking. Let me alter that. Okay, we have changed our connection. Okay, so now we should have a good connection. I apologize for that. So again, this week we are talking about self-employment taxes, and we are talking about what you need to know for your private practice. All right, let's jump into that. First off, what are self-employment taxes? Well, the easiest way to explain it is to think about your past jobs and when you received a paycheck, a W-2 employee. You remember on your first paycheck when you opened that up and started looking at all the money you earned, and then you noticed there were some guys named FICA and Medicare who were taking quite a bit of money away from you. Hundreds of dollars maybe in some cases. Now, those are your payroll taxes, FICA, Medicare. There's some other smaller ones in there, but those two big ones are what we're talking about. When you're an employee, I can't remember the exact percentage, but 6.2% of your wages are taken by Social Security, FICA, and 1.45% are taken by Medicare out of all of your wages. Now, you pay that. Your employer also paid that same amount. So both you and your employer were paying those taxes. The total for those comes up to about 15.3% of a tax on those. So what self-employment tax is now you're working for yourself. You don't get to just erase those kinds of taxes. You still have to pay them, but now you are the employee and the employer, so you pay both halves. You'll pay 15.3% of self-employment taxes on your self-employment income. So if you remember, weeks ago, we talked about setting up your business entity. When you're an LLC, you are facing these self-employment taxes yourself. So that's the gist of it. These are your payroll taxes, just doubled, essentially. So let's talk a little bit about more what they are. First, let's talk about how they're calculated. Now, your self-employment income is first based on your net income or your net earnings from that business. That's your revenues minus all the expenses you can take to get to that net income number. Now, from there, this is a step we don't often talk about because it's a small thing and doesn't have a huge impact, but let's be accurate. So from that net income number, you actually can remove minus 7.65% out of that, or multiply that by 92.35%, whatever. And that reduces your net income a little bit to your self-employed income. Now that new number is what's times by that 15.3% we talked about. Now that 15.3%, it's two pieces we already talked about. It's the FICA and the Medicare. Let's talk about the FICA or the Social Security side of it first. This is where it gets a little complicated. You only pay up to $168,600, or excuse me, you're only taxed $168,600 for that Social Security portion of it. And that is 12.4%, or the 6.2% from your paycheck. So 12.4%, it's only taxed up to $168,000. Above that, there is no more tax on that. Now that's the number for 2024. For 2025, it goes up to $176,100. So keep that limit in mind. Now, you might recall from having your paychecks and hearing about it that your paycheck is only taxed on Social Security up to some number, $168,600, or 2025, $176,100. You have that same limit applying both to your W-2 earnings and your self-employment earnings. If you have a W-2 job and you're running a business, that creates self-employment income, and a lot of you therapists might be in that situation if you are if you are running the business as a side thing, or maybe you started the business during the year, if you hit those income limits, then between your W-2 and your self-employment income, you are not going to be double taxed on that. So it's being reduced. Between your W-2 and your self-employment income, it's stuck at that $168,000. Any more earnings than that, and there is no more FICA or Social Security tax. That 12.4% or that 6.2%, no more. So that's complicated. If you have questions about that, talk to your tax advisor. They can help you walk through that, but just keep that income number in mind, $168,000 or $176,000 for 2025. Now, the other side of that tax, we talked about the 12.4% for FICA, Social Security stuff. The other side of that, the 2.9% for the Medicare, there is no income limit. Your income could be $10 million and you'll still have that Medicare tax. You'll actually have additional Medicare tax if you're that high, but we won't get into that. But that part does not have an income top. Okay, now I hope that was as confusing to you as it possibly could be, because that's how they wanted it to be. But if you have any questions about it, talk with your tax advisor. They can help you understand that self-employment tax and show you the calculation on your own income. Now, one other thing to mention that we rarely talk about because it's not a big impact, your self-employment tax deduction. So your whole self-employment tax, let's just use easy numbers here. Let's say you have $100,000 of income that's being taxed by the self-employment tax, 15.3%, etc. That means your tax is $15,300. Pretty straightforward, that part. A part we rarely talk about, but it is in there, is your self-employment tax deduction. Half, 50% of the tax becomes a deductible expense. This goes back to when it was originally a payroll tax between an employee, you, and your employer. Your employer pays that payroll tax, but they also can treat it as a deduction on their tax return. So now that you are your own employer and you have that self-employment tax, the same concept applies. Half of the self-employment tax you pay. So if we're using that $15,300 number from our example, half of that, $7,650, would be a deduction on your tax return. Now here's the trick. A deduction is not the same as a tax. They're not equal. They're not apples to apples. Not dollar for dollar is a better term. Your taxes, that's the tax dollar amount that you're going to pay. A deduction is limited to whatever your tax rate is. If you're in the 24% tax bracket, that's $7,650 deduction from half your self-employment tax is only going to be applied at 24%. So we don't often talk about it because it makes it more confusing, but there it is for accuracy's sake. Talk with your tax advisor again to understand it better. We usually don't talk about it because it just makes it more confusing. Now, so we talked about what it is and how it's calculated. And obviously that's an extra tax. Self-employment is not the same as your income tax. Your income taxes apply to whatever your tax rate is. You're at the 24%, maybe the 10%, wherever you're at. That's your income tax. Self-employment tax, that 15.3%, that is a fixed rate. You could earn $10,000 and it'll be applied to there. You could earn $100,000 like we said, and that'll still be the same 15.3%. So a lot of people don't like the self-employment tax. I don't know if you realized it, but it's basically just adding more tax on top of the tax you're already paying. If you're in the 22% tax rate, add 15.3, and now you're at the 37.5% tax rate for some of that dollar you earned. So there are ways to reduce your self-employment tax. Not creepy, scary, sketchy ways, perfectly legal and ethical and acceptable ways to reduce your self-employment tax. So let's talk about some of them. First, make sure you are including all of your business expenses that you can as deductions on your tax return. Again, talk with your tax advisor for help on identifying those deductions. But take all of the deductions you can. That reduces your income and thus reduces your self-employment tax. Second, and this is one you're probably going to hear a lot about if you haven't already, being an S Corp. I won't go into the details, but basically an S Corp does not have self-employment tax. You're required to have a reasonable salary, so you again become that employee and your business becomes the employer, and they're split again. Just like when you were 16 or 17 working at the fast food place, you're getting a paycheck. Your paycheck has half of your payroll taxes taken out. Business has their share of the payroll taxes taken out. Now the difference is an S Corp doesn't have to pay you all of the money the business earns. Pick a reasonable salary. I usually say between 40 and 80,000, but it's kind of anywhere. Reasonable salary, only that income is faced with those payroll taxes instead of all of it if you're an LLC. So talk with your tax advisor. That's a decision that you should make. You should not make lightly, but it is one that can save you quite a bit. Also, you can contribute to retirement, tax deductible retirement accounts. Those are another perfectly acceptable business deduction that will reduce your self-employment income. Also, include your health insurance premiums you pay. Again, another one you want to talk with your tax advisor to make sure that's done properly, but including your health insurance premiums helps to reduce that self-employment income. And lastly, we've mentioned this before, but your home office deduction. It's one that kind of gets overlooked because it's more of a personal expense that can be claimed partially as a business expense. So keep those things in mind. Again, talk with your tax advisor to get a better idea of how those things can apply. So in short, the self-employment tax is a little bit unavoidable. There's things you can do to reduce it, and depending on what your activity is, there's things you can do to avoid it completely. But generally speaking, for us in the service industry and for mental health professionals with their own private practices, it's really hard to get around. Now, we talked about ways you can reduce it, and I recommend doing those things. But one thing to be aware of and conscious of is the tax preparer you work with. He should be aware of and talking to you about the self-employment tax, because it's not one we are always thinking about. It's easy to think of your income tax and your tax bracket and what you can do, but it's not always top of the conversation talking about your self-employment tax. So keep that in mind. I hope you're thinking of these things and hopefully generating more questions that you can ask from your tax advisor to get more reasonable answers. Now, if you do have any questions that I can help you with, go ahead and leave a comment on this video or DM me directly. I'll respond to those as I'm able to. Now, my firm is also happy to have a discovery call, a free 30-minute discovery call with you. Just go ahead and DM us. We'll send you a calendar link. You can get on our schedule. We can talk about your tax situation, your business's needs, and what services we can offer to work together to reduce your tax burden. Now go ahead and follow and like or whatever for future tax tips and event notifications like this one. And visit our website, latercpa.com. I will see you on the next video. And remember, have a great weekend and keep helping others to help themselves. Goodbye.